On September 8th, Realty Income CEO Sumit Roy and their Chief Financial Officer Jonathan Pong participated in a roundtable discussion at Bank of America's 2025 Global Real Estate Conference. The purpose of this event was to invite leaders in global real estate to discuss their investments and provide updates on the global real estate market. During Realty Income's roundtable, their CEO and CFO gave some really important updates in regards to how this REIT is going to operate going forward. It was highlighted that given shifts in the real estate market, Realty Income was in the process of making some pretty big changes to their business. During the conference, they highlighted a couple of major changes for the REIT that are going to impact how they conduct their business going forward. The changes are going beyond what you might expect in a high interest rate environment or what could be expected if a recession occurs. And if you're a shareholder of Realty Income like me, then I think that these are changes that you should keep in mind. So that's my main reason for wanting to make this video, which is to cover everything that was said at the conference and also discuss the changes this company is going through and what those changes imply for us. So with all that being said, let's go ahead and break down the major points that were discussed at this conference. The first and most important way Realty Income is changing their strategy is they're becoming significantly more focused on becoming an international organization. They've hinted at this over the past couple of years as the amount of interest they've been showing in international real estate has been steadily growing. And they've been continuously highlighting this in their earnings reports. But what was so surprising is just how much Realty Income is now shifting their focus towards properties outside of the US. As Sumit explained, in the first 3 quarters of 2025, Realty Income sourced over $60 billion worth of real estate. And if you're not too familiar, sourcing is the process of finding investment properties that match the company's outline criteria that they might make an investment in. This would include real estate that's both publicly listed and also investigating and potentially making offers on properties that aren't being listed as for sale. $60 billion is a lot of money right now, as many REITs and real estate companies in general have been slowing down their acquisitions due to high interest rates. But according to Roy, almost 80% of everything Realty Income has done in 2025, which includes sourcing and actually buying real estate properties, has taken place outside of the United States. He explained that many markets in Europe are a lot more appealing for property acquisitions, and the biggest reason for that is there's much less competition in Europe. The reason why there's so much less competition in Europe is because REITs really aren't that popular over there. And many REITs based out of the US have not expanded into Europe at this time. For the past few years, there's been a lot of discussion happening about whether or not Realty Income has become too big. Some people have been speculating that as this REIT becomes bigger, it'll be much more difficult for them to keep growing on a consistent basis, both in AFFO and in the amount of dividends they issue to shareholders. And what I've been saying for years at this point is that Europe still represents a lot of potential for Realty Income. According to their most recent financial report, only 3.7% of their portfolio is in continental Europe. And according to their estimates, Europe is the most addressable market for them. Realty estimates that there's roughly $8.5 trillion worth of investable properties, much higher than in America right now. Sumit also said that this year was the first year that they broke ground in Portugal, officially entering the country in Q2. That represents yet another market for this company. It continues to show that this business is not running out of opportunities to expand into. That could be an issue later down the road, like maybe in a few decades, but there are still plenty of opportunities out there for Realty Income to buy properties. And if they wanted to, they could also acquire other REITs, which they have done in the past to quickly expand their portfolio. Speaking of new opportunities, there was another point that was made during the B of A conference. Sumit talked about how Realty Income is now planning to expand a lot more into data center properties. Not too long ago, the company invested in their first data center, which is located in Northern Virginia. These types of properties present a really great buying opportunity for them. Historically speaking, Realty Income has been largely known as a grocery and a convenience store REIT. Their biggest tenants continue to be brands like 7-Eleven, Dollar General, and Dollar Tree. They've also owned a lot of movie theaters and gyms and just mainly a lot of retail. But over the past few years, they've undoubtedly been feeling a lot of pressure from the internet. In what's likely a bid to remain e-commerce resistant, the company is now planning to acquire more data centers, which is a sector that they've largely ignored up to this point. There's a lot of really solid data center REITs that exist because data centers can be really excellent properties to own. REITs like Iron Mountain and Digital Realty Trust have been solid investments because these properties are mission critical to both companies as well as the federal government. Neither of these two sectors can operate if you don't have servers to store information. A business or a government can relocate itself by changing buildings, but changing data centers can be significantly more difficult. It's why these types of companies have very, very high customer retention rates. What's likely an additional source of motivation for them to break into data centers is the ever-growing presence of AI. As artificial intelligence continues to be all the rage and is apparently replacing workers already, data centers are going to continue to be in high demand. According to a report from December of last year, 2025 is expected to see the most number of data centers being constructed in history, and that's a trend that's likely to continue going beyond this year. Most people are not aware of just how much data and electricity these platforms require to operate, and since various companies have their own AI platforms, they're all in competition to have the most data and the most up-to-date information. Sumit explained that a challenge in going for these property types is ensuring the landlord will not be responsible for building maintenance. Realty Income is a triple net lease REIT, which means they aren't responsible for paying things like building upgrades, insurance, taxes, repairs, and so on. Data centers require special attention in a few ways. They use a lot more electricity, so power lines need to be substantially better than your typical office building. Servers also produce a lot of heat, so cooling and ventilation are additional expenses that can occur. It can be more difficult to negotiate a situation where the owner of the servers is willing to foot the bill for everything I just mentioned. But being a triple N REIT saves the company a substantial amount of money that they can use to acquire more properties or pay higher dividends. So this company won't acquire anything that doesn't involve an agreement that Realty won't pay for maintenance and upgrades and so on. And given the fact that data centers are in such high demand, it'll add some more economically resistant properties to their portfolio. A number of Realty Income's tenants, including Walgreens, have been announcing store closures this year, and that's also led to some investors being concerned about the future of this REIT. With all of this in mind, it continues to show why Realty Income is such an outstanding REIT. They're recognizing that how they've been doing business up to this point in their existence is going to need some slight alterations if they're going to continue to be the best REIT in the sector. If you want to check out their presentation, then websites like Seeking Alpha have a transcript of their roundtable that you can read. Besides the conference, the other Realty Income news is that they just had another dividend increase last week. They've grown their monthly dividend every single quarter for many, many years, and last week was no exception. Let me know your thoughts in the comments. Do you like how they've been expanding internationally and into data centers, or do you think it won't be enough for them to remain competitive? Feel free to share your opinions, but with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.